How the banks won over Washington again. A decade out from a cataclysmic Wall Street meltdown, banks are winning again in Washington. Less than a decade after being blamed for fueling the worst financial crisis since the Great Depression, banks are winning again in Washington. The rebound for the lenders has been so remarkable that Republicans and Democrats in Congress are pushing to scale back financial regulations imposed in the wake of the meltdown, one of the few areas where the two parties agree. President Donald Trump, who once vowed not to let Wall Street get away with murder, has dropped the demonizing campaign rhetoric and recruited industry veterans to his administration. His Treasury Department has drawn up a series of recommendations for trimming the post-crisis rulebook. Even the Federal Reserve, the top banking regulator, is working to relax safeguards. Lawmakers and regulators are rethinking policies including loosening mortgage protections, curtailing so-called stress tests that gauge how banks would fare during economic turmoil, and simplifying capital requirements for smaller lenders. Many of the proposals are targeted rollbacks rather than a wholesale repeal of regulations, but they would have a meaningful impact on the industry. Behind the shift is the intense focus by the Trump administration and GOP lawmakers on boosting economic growth, a centerpiece of the campaign to enact the massive tax reform legislation. Trump said lightening up on the banks will spur lending and allow businesses to grow, an argument that some analysts question but that the banking lobby has eagerly embraced. Banks aren't the winners, American Bankers Association President and CEO Rob Nichols said of the new dynamic. The winners are the economies, clients, communities and American families buoyed by additional economic growth that can be created through the banking system. The deregulation drive comes as the U.S. nears the 10-year anniversary of the crisis, when the federal government committed hundreds of billions of dollars to shore up the financial system. Congress then passed the landmark Dodd-Frank law in 2010, the most sweeping rewrite of financial rules in 7 decades. Sen. Sherrod Brown, D. Ohio, the top Democrat on the Senate Banking Committee, said banking legislation that's moving through Congress showed there is a collective amnesia about the crisis. People are going to look back, whether it's 5 years, 10 years or 15 years, and say, this was the beginning of a massive deregulation scheme, Brown said. Bank lobbyists say the government overreached. The pendulum swung way too far out of line because of the crisis. Independent Community Bankers of America President and CEO Cam Fine said, the agencies became much too harsh and much too close to banker concerns, and I think you're going to see the pendulum swing back. Republican and Democratic lawmakers are echoing the sentiment that the post-crisis rules need to reflect today's risks. Senators from both parties have joined forces to deliver a bill that would streamline mortgage and capital rules for small banks while also relaxing regulatory oversight of several large, regional lenders. The Senate Banking Committee approved the legislation earlier this month, and it probably has enough support to become law next year. One of the bill's co-sponsors, Sen. John Tester, D. Montana, said he wasn't surprised that so many Democrats were signing on to the legislation, viewing it as a way to boost smaller banks. They see what's going on in their communities and understand that Wall Street was the reason we passed Dodd-Frank and it bled down to community banks and regional banks, he said. Tester is among several moderate Democrats pressing ahead with the bill despite warnings from Brown and others in their party that the rollbacks could endanger consumers. At least 11 Senate Democrats are backing the bill, ensuring that it will not be obstructed by a filibuster. It's past time, said Tester, one of a number of Democrats up for re-election in red states next November. It's too bad we didn't get this done 4 or 5 years ago. But everything has its moment in time.